Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm John Darsie, Editor-in-Chief, and together we bring you the Morning Call Express. So yesterday, Scott, the market opened lower but was able to rally and claw back from that lower open. Volume remained light, but it was constructive action for swing traders like we've been talking about. Do you think that's enough to keep the rally going, or do you think there's going to be more rest and digestion? We're getting another lower open today. Do you think we'll get a similar scenario as yesterday?
Well, I think the same areas that we watched yesterday is areas to watch today. We've been talking about, as a swing trader or someone who's trying to hold multi-positions, it makes it pretty easy to do so if you're holding the 8-day and the 21-day moving average. So if you go to the chart here of the spiders, you will see that's exactly what's going on. We've had a really nice move since the November lows, came all the way into resistance. That's where we failed, going to the fiscal cliff, came in, held support, gapped up into the new year. And with that said, we also held the 8-day right there, continued higher, and then yesterday we could have fallen apart. Apple was down $20, lots of things were going on, and lo and behold, the 8-day held again. So at this particular point, continue to watch 146.20 or maybe even closer to 146, and I even think we can come into the 21-day and still be very constructive, but the speed will change. But as of right now, market is still hanging in there, money's rotating really well.
And something that we've talked about is the fact that the banks have led us higher and sort of held us up in the face of some weakness from a lot of leading tech stocks. And the market has sort of been resting ahead of earnings for those banks this week. And this morning we got reports from two of the biggest names in the sector with Goldman Sachs and JPMorgan. Scott, tell us a little bit about those reports and what to expect from the banks today.
From face value, they both look pretty good. JPMorgan came out first around 7. It was off a little bit, but if you look at the chart here of JPMorgan, it's had a hell of a ride. This stock, ever since the June lows when they came out clean with what that well loss was, and then all the way up to where we closed yesterday. They closed on the highs of the day in front of a report, so it's only down like 40 cents. Like if you look here, the 8-day moving average is 45.35. You can actually see where it's trading pre-market. It's trading above there, so it didn't even give back what it was up yesterday. So as far as complexion, I think that the report was good. I don't know, just like Wells Fargo, if it was enough to get it to new highs, but I would write down 44.80 and then this level as support. And I do think if it gets to here over the next few sessions, you buy it back as we have a nice trend. But as far as Goldman's report was seemed pretty blockbuster at face value, and it wasn't up yesterday. They reported, I think, right around. Let's see, I just wanted to check to see what it's up. They reported well above earnings, well above revenues. It's had a really nice run for a lot of guys, who bought it down here at 121. So here it'll be interesting to see, can it hold the gap open? Can it help ignite? And that level that I'll be watching is 138.15. If you're looking to be in Goldman today, make sure it holds this. And if it doesn't hold this, maybe the banks will get some pressure, and then you have to watch the 8-day support there.
Then tomorrow we have Bank of America. Do you want to take a look at that chart real quickly to see what to expect from Bank of America going into its report?
Well, at this point, 1133 has been holding. Let's just say 1133 is the area. That's a 21-day. To make it easy for guys that have been holding since $8 or $10, 1133. It'll be nice to see if that continues that way.
All right, let's go ahead and take a look at Facebook. Facebook yesterday had its much anticipated surprise event. There was a lot of speculation going into the event about whether they were going to announce a new phone or a search to rival Google. And the phone seemed a little bit unlikely. Search seemed more likely, and that's sort of what we got. Some people expected something to rival the traditional search of Google, but they unveiled something called Graph Search, which was more of searching stuff within your friend network and getting basically opinions from friends that are more relevant to you from a personal standpoint. And initially after the news, something like Google rallied, but they've also partnered with Microsoft, so that Google rally was a little bit tempered. Let's go ahead and take a look at Facebook first, Scott, and see what to expect from that after a little pullback yesterday.
Well, a lot of people thought they would sell the news, and they actually did, and rightly so. The stock went from 20 to 24, from 24 to 28.60 to as high as 32 on Friday. So if you look here at the chart, I do think that this move was powerful enough to have it continue at some point later this year. But right now, you're in the midst of a 2-day pullback. It's trying to hold the 8-day. I would think that it's going to be a little noisy for a little while because I don't think it was as blockbuster of a news event as people thought. So for me, I'm thinking about perhaps buying back my shares that I sold into some of this strength on the upgrades, right around this, 28.60, 28.70. And, I'm actually short a little bit. I'll see if we can get below the low of yesterday, 29.88. Perhaps we get a little bit more cash flow, but I do think we can get some kind of a consolidation phase like we saw after this big move right around here. So I wouldn't be in any hurry to running by Facebook, but I do think, though, over time it could go higher.
Finally, in the Morning Call Express, let's take a look at Apple. Yesterday, Apple saw more weakness, had 2 straight days of more than 3% loss, and now Merrill Lynch is downgrading the stock. It's sort of like you said with Facebook, Scott, that after that big run, we have people upgrading it left and right, and then we get a pullback. And with Apple, we get a downgrade, and then famed technician Tom DeMark came out and said he thinks the stock is a day or two away from a major bounce. What do you see from Apple, and do you agree with DeMark?
Well, at this point yesterday on the close, it gave you no signs that it was getting to that capitulation low. And I know it's come a long way. It's been battered and bruised. And I do like his technical work. He made a big call about the Shanghai Composite, and I agreed with him right away. For this, I think Apple still has a lot to prove. It needs to do something different. Pre-market, it's up like $3. Let's see if it can actually hold the pre-market gap and then continue. If you look here at the chart, you will see it's had a hell of a move from the top here at 700 all the way down to support. You had a few different rallies along the way, then finally broke key support, and it's not really extended below the key support. So if he thinks this is a trap, maybe that makes sense. If you want to write down yesterday's low, 48.38, that's the pivot that you could trade long against. If it breaks that, maybe it continues lower, you get a red dog reversal. But overall, too, earnings are until next Wednesday. I'm sure a lot of people that got very bearish were making big bets for the puts at 500. So if it wants to do some kind of rally to retest the 500 into Friday, you know what, maybe there's some money to be made there, but I wouldn't start chasing Apple, especially ahead of its earnings.
All right. That brings you the Morning Call Express. We'll get into all this and more in more detail in the full morning call. We look forward to seeing you there.